Hello everybody and welcome. Welcome to my channel where I'll be using technical analysis on the stock market to show you levels that I think are important to protect your portfolio and secure your future. Alright, let's get right into it. Today again was another wicked day. Can add another green day to our streak of days right here on our just complete almost parabolic move up. Almost. I start right here in full view just to give you guys a closer view of some of these levels that are important. All right, if we scroll out, the first thing I want to point out is the negative divergence. We keep grinding higher and higher and higher, and we are continuing this negative divergence. Doesn't mean we're going to sell off right today, tomorrow morning, or even the next day. We could absolutely even keep grinding higher and higher and higher and losing momentum the whole time. But when that falls, that's going to give you your rug pull that everyone is really expecting. But here we are continuing each day higher and higher. Just got to keep in mind, you watch these levels on a smaller time frame, on the 30-minute. And again, it's just confirming the negative divergence. Switch over to the SPY. It's doing the same thing. If you guys have been paying attention to the dollar, it will really guide you in the direction that you need to. Yes, these are putting in all of these triple Qs as well, putting in divergences. Still grinding higher, can still absolutely go higher. As long as that dollar continues to go down and can even turn back up before the sentiment gets switched from bullish to panic mode. Okay? And again, on the triple Qs, we're just continuing this. Nothing that you can absolutely put a trend line on. Parabolic move up, just a curve. If trend lines were round, it would be perfect. Okay? The IWM, the level that we popped this morning, we are still on a 30-minute time frame. Doesn't look like a negative, a bullish, or bearish divergence in the IWM. Kept momentum up until the high right here. And it looks like we broke back down at the end of the day. Back under the line. So, one thing I want to keep in mind, the IWM looks like it's at a good resistance level. The SPY, the triple Q, they're putting in negative divergence. I'm not saying be fearful whatsoever and clear out your portfolio, but start thinking about it. Start thinking about levels that you want to take some profits at and get a percentage of your portfolio into cash. So if anything was to happen, you still have all your positions that you would have rode down anyways, but now you have more money to buy on the way up. We are still in a buy the dip market, as you know. As long as this bullish sentiment carries on, if you would have bought down here, would have been like a 15% gain. A 5. Okay, I'm thinking of the SPXL, the 3 times leverage. Still, you guys get what I'm saying. Switch over to gold real quick. Gold is, again, just continuing this uptrend. I think as long as the dollar keeps moving up or down, gold will keep moving up. Tag this line somewhere along in here. Silver, just kind of sideways today. The short squeeze and all the volume, and I want to say retail investors that are getting into silver and all the talk that's around it is just really pushing this price up. I don't see silver being overgraphed, not overvalued, but silver kind of works in correlation with gold, and if silver was to keep going up, gold would to continue as well. We're on and up. I do suspect we go up a little bit, but that dollar we will get to here in a minute will just bring us right back down. Bitcoin, if you want to watch these levels, Bitcoin, it's only up another 10,000 today. Would I say that yesterday? uh, the talk, let's see, the talk I've heard is Ethereum may even outperform Bitcoin. So I have not considered graphing that one. If anyone would like me to, you could comment and let me know, and I would graph that one right along here with Bitcoin. That's just the talk that I've heard. Dogecoin is the new one that I've heard everyone talk about. Obviously, just because it's new. It's no more. It's no more Bitcoin. You don't hear kids talking about Bitcoin. Kids are talking about Dogecoin and spending all their allowance and their parents' money on Dogecoin right now and Bitcoin. But that was Elon. We explained that one. We will continue on. Continue on to the bonds right here. The bonds actually broke through this halfway validated trend line I wanted to have in here. It's not necessarily coming down into oversold. We're just continuing down. I think we'll grind even lower as this market goes higher to come in for a tag at around 46, 47. Depends on when we get there. So keep an eye on that. If we switch over to the daily, the divergence I pointed out is still there. And today, even though it was a red day, we went up in momentum on the daily. I think I forgot to show you this on the SPY, but our close today on the SPY was below the close of yesterday. So we lost momentum. Lost momentum even though it's a green day. I don't want to, again, put any kind of second thought into your mind that it can't go higher, but this would be one reason to start to look for an exit. Keep the exit just as close to the entry. Okay? The 10-year yields real quick. If we go down to the hourly, we broke this line just like we broke the line on the yields, and with really no more momentum here or on the bonds, here on the yields, yes, we broke this line, but it's on the same momentum. So I kind of see this coming back down tomorrow morning, depending on where we go. There is all on the price action and what happens, but the momentum is saying yes, we're up, but we should be right back down here where we were. That's one way I usually try to read it. It doesn't always have to happen again. It could pop up, and that could slant up, and that could be the end of it. It could take off from there, but just watch that one. Here again on the dollar, I think I can almost just bring the dollar in on a daily, and bouncing in between these two lines is where I see the dollar for the next weeks to come. And here we are getting even closer and closer to the secondary trend that I had. We broke basically the primary. We made a new high, back tested that high, broke that high, broke our primary line, and now we're coming for our secondary line. If we break that secondary, I don't see kind of any resistance in between 89 and this trend line right here. Maybe a sideways support right here at 90. We'll put a line right here just in case. Maybe. But other than that, there's really nothing in between. If the dollar continues to fall, things like gold will go up. Hit that trend line about the same time this hits here. The markets will grind higher, even though they are on a bearish divergence with bullish sentiment. The bullish sentiment is going to keep people putting in their money, buying and buying, and it's going to just keep bringing that market up. So watch these levels, always good levels to watch. Right, if we can switch over to some indicators, a couple things I like to look at would be the put to call ratio. I did a midway video where the open of the day, where were we? Here, let's just look at this. I believe the open of the day was down here where everyone had more calls in. And we ended the day about halfway in between our bullish and bearish sentiment levels. So we started the day, everybody extremely bullish, and we ended the day halfway. I think more people are starting to see that divergence, but it can still grind higher. Ending the day right here in the middle doesn't really give you room to think either way about it. It could go either way at this point. We can switch over to a fear and greed indicator. Today we are at 64. Yeah, I believe yesterday we were at 56. So here, as the markets grind higher, the fear and greed is just grinding higher along with it. About a week ago, we were almost down here. As soon as the markets even look like they're going to start to fail and they do it, everybody just switches completely bearish, and they want this slammed to the max because everybody's moving their portfolios around and trying to not lose money as the market falls. Here we are. This is the put to call on the CBOE, and it is right there again, right at the middle. Basically 2 or 3 days in a row, we have stopped the day right in the middle. We've opened it down, we've opened up, we've opened down, we opened up, but we've really ended the day right here for the most part for a long time. So having your eye early in the morning on these is always something to look at. If we switch over to the VIX, after it got slammed down after the 29th, 21st, 29th, 27th to the 29th, where the market fell flat on its face. The VIX went high, and ever since it got slammed right back down. It got slammed, and I want to point out a bullish divergence, not necessarily a new low. This was right here. That would have been your buy signal, and I think we're just going to keep bouncing in between here. I don't expect a spike, but I don't expect it to keep falling with momentum picking up. Same thing with the UVXY. This is a proxy, and it inevitably whittles its way down to zero after a while, but on a quick spike, when you start to see the sentiment of the market switch, people are going to rush into things like volatility and the dollar, and this is one of the ways you can take advantage of the VIX. I'm not sure if you can buy the VIX itself, but this is one way that I get into it. If you would have bought here, rode that all the way up to 14, that's a good 30-40% move whenever you caught it. Just a way to get into the VIX that I see. Let me double check everything. I believe that is everything I have for you guys. I want to point out oil, not as a indicator, but should we start here? 1, 2, 3, 4, 5, 6, 7, 8 days, 8 green days in a row. What goes up must come down. Okay. So I just want you guys, I want to point those levels out to you and get this out there as soon as possible. I'm going to get off here so you guys can see these. You have a good night, good luck, and please like, subscribe, and let me know what you think. Bye.